40 seconds. Let's start. Just check. It's audible. Voice is it audible. Yes. Very good morning and welcome to the first batch of new course AFM. In fact, name has changed, but not lot many things would have changed. Although I don't want you to spend time on sir what is the change, because first question could come before I move into the subject. First question could come is what changes has come, etc. It's altogether irrelevant for you, at least for you. Reason being because you did not even know what was there in the SFM. I'm assuming you are studying it for the first time, and subject has been more or less converted to, maybe I can say, which was old to old course. They have used something, they brought back. Maybe few of the items you would have studied in Inter. Actually, before the, now I call this as a AFM as a new course, SFM which was a course new. Before that there was SFM paper. When the new SFM came, they shifted something to Inter. Now they have again reshuffled the subjects. You should also keep doing something so it looks new to you. The way we change the clothes, it's morning you wear something else, evening you wear something else. But subject is beautiful. Today's class would be, I would be talking a lot, and the objective of today's class is very clear. You'll get the framework that what we are going to study in this. Maybe I'll be doing a lot of inter stuff. All, maybe everything would be from the IPCC inter, but which is required for my chapter. For example, let's suppose I do some formula. It could be as simple formula as earning per share. Maybe it could be a possibility. But that will not mean that we will go into the EPS only for the sake of just learning EPS. We know the EPS formula. Or maybe retention ratio. Maybe a payout ratio, for example. The objective would be, when we'll be moving into the subject, chapter wise, you'll understand the what reason of studying those kind of topics which there. So the today's class will be very important. I would be talking a lot. Few things I'll in between also, as and when it comes in the mind, I'll speak to you. My expectation from you, your expectation, if you have something which could, you can tell me. My expectation would be, one of the expectation is the way you have come up on time today, try to be on time. That's one thing, because I never, first few days we always see everyone is on the time, perfect time, because you have to see how the teacher looks like, how he stands, what kind of clothes he wear, and if someone has studied earlier inter, it's okay, else some of you would be seeing me for the first time. So you will find how he speaks, for example, whether he knows the English is British English, Indian English, or American English. I'll try English has to be, because this classes will be entire English. I'll try that with whatever English we use, you are able to understand. Means I'll not be using accent English and something of that kind of a sort. Only problem when comes in subject is when I talk in English, because it will be 100% English, not even the any kind of examples which I have to make, for example, for the purpose of understanding. It could be from movies, it could be from somewhere else. I'll not be using any kind of Hindi. No Hindi would be used, even if I have to explain the sets of Bahubali, if it comes in my example, because some places you'll find a lot of movie examples coming in, because without, from them you learn the subject or some stories, etc., if it comes at all. Although I'll try to restrict, because you being at a CA final, sometime you might take it seriously. Oh, final sir, we are not students interclass, because inter was different. But I expect you to remain the same what you were in the CA inter. Exactly same. Just come up, no tension at all, what the exams are, how we'll pass the exams, what will go. Because when you're learning something new subject, one thing has to be in mind, at least the CA final, that subject can be my career option. I'm saying it very clearly. Today itself you'll feel the hint of it. And since you're starting in the peak of a result season, that means June has just ended, every company reports their quarterly results, and you will be starting in the peak of yesterday. Reliance, for example, announced the result day before yesterday. Infosys, two of the heavyweights in the Nifty. Any term which I'm using, don't worry, every terms will be getting clear by the end of the class today, because my objective is you should fall in love with the subject. If you cannot fall in love with me, it's perfectly fine, but you have to fall in love with the subject. The moment you fall in love with the subject, you'll automatically will be inclined to come, and automatically you'll be studying. Because what I'll be studying is not like, maybe I'm not criticizing any of the subjects. The subjects what I'll be doing is something which I get up anytime in the morning, which I get up any time in the morning and open up any paper, any website, or any general discussion, my subject you can talk on. You can talk on the mutual funds, you can talk on the merger acquisitions, you can talk on the corporate valuations, for example, valuation side, the business valuations. You can speak on the startups, you can speak on the interest rates, you can speak on the inflation, you can speak on the RBI governor meeting, you can speak on the Fed. Everything we can speak, and everything I have a relevance with the subject. I am assuming you do not have the pressure of this recent exam which comes in November. So I am not assuming anyone is sitting from there, because it will take us some time, approximately the time it will take. That means it will not finish off till January or December. It's not, will finish off an appropriate time. The time I know which will finish off approximately. So around 220 to 230 hours. I'm assuming that's rough, depending on how much practice we need more or how much we need to go further. And the FR also, you some of you would have started in the evening. So accordingly, we finish off in the proper time. That means before any kind of festival season starts, before the exams, in fact, we'll finish off. But I'm assuming no one is from the November batch, because I cannot discuss this subject freely. The reason is because if I have the pressure of the November, which is almost 3.5 months, so we can finish off the course before that. It's not that we'll not be able to finish it off. But my objective of studying the subject, my way of talking the subjects, I will not be able to do. It's actually what I tell you is the subject has to be talked. My subject, someone would tell you it's subject is, sir, it's a mathematical subject. 99% of the subject I would be able to speak. When I say a speak, that means formula also will, which I'll do, I'll be able to speak. And the moment you get that habit, it will take approximately, maybe some would adapt in 3 days time, some would adapt in 6 days time. Within that time, you'll adapt to the speed with which I talk, you'll adapt to the subject, you'll adapt to the way of thinking the subject. The objective is we should be able to think about the subject, we should be able to speak the subject. When I say speak, it does not mean that I have to speak the formulas. It's a commercial mathematics term. For example, if someone says interest rate formula or any of the formula, or maybe a calculus, for example, or a probabilities formula, for example, maybe you would have done some extreme probabilities formulas also in your CPT world or into somewhere. I should capital budgeting, for example, KO, for example, discount rates, for example. What exactly do we mean them in the commercial term? When I use the word commercial term, you will be a chartered accountant very soon. No one will ask you that you have to do the extreme mathematics, because I have the bond valuation exam in my course, I have the share valuation in my course, I have the mergers in my course, I have the forex complications in my course, I have the derivatives, which is a part of the stock exchange, a small part of the stock exchange derivatives. Stock market is a bigger stuff. We have a derivative, FNO, futures and option. I should be able to do it. One disclaimer, I give it very clearly during the class. You might get fascinated with this subject when I speak. It's very open, I say. Otherwise, I could have done the marketing that we can learn in stock exchange, you'll become the expert. I'm saying, even if you think you have become the expert, at a student level, try to avoid at least the futures and option or any kind of a segment. Any discussion I'll do in the class, I'm very clear, I'll do for the educational purpose. Means, for example, if I speak about the Reliance, if I speak about the Aknit or Ukal Fuel or Dish TV or any of the stocks which comes for my reference purpose, let's suppose Suzlon, for example, or these kind of idea, for example, although I do not love idea because this has been most well destroyed for a long time. If your batch could be a turnaround story for it, I'll be very happy with that. Since every batch I've tried, everything moves, but that idea does not move. Neither it closes down. I don't know what has happened. Fund will come now, fund will come now, fund will come now, fund will come now. It has go, line will come, line will come, line will come. No one is coming. I don't know what has happened. So maybe your could be a turnaround story which comes. Let's see your luck. The previous batch which I just started, few stocks moved which did not move in 1.5 years. So their luck has worked for them. I do not hold any stock. It's for my educational purpose. Maybe my family, friends, etc. But in your with you, I'll be discussing the shares or anything which is discussed. For example, today you'll feel the way of discussion. For example, if the Reliance result came out, how the market has assumed. Although Reliance announced the result after the market hours, market closes 3:30. Results came in the evening, but I think it's GDR is listed. GDR is Global Depository Receipts. What you have done, ADR and GDRs. So these terms, if you are aware of it, if you can recall, it's good. Otherwise, I would feel one thing for sure, you have not studied anything in the CPT world, you have not studied anything in the inter level. That would be my first assumption, which I'm saying very frankly, which I tell every, in fact, first class which I'm taking, I speak to the same way what I'm talking to you. I'll assume you have not studied anything, but yes, one thing I'll make sure that I do not slow down my speed as if we are going into the CPT or the inter-level. Maybe today's class I would be slow, or 3-4 days I would be extremely slow for some of you. Could be a possibility. If I'm fast, that's my mistake if it happens. But I'll be extremely slow maybe, so that you get adapted to the morning schedule. Wake up in the morning, you get adapted to me, I get adapted to you. Second important part is few things what I expect from you I'll tell you before I move to the subject. In fact, one thing is you have to carry yourself as it is. You have to carry yourself the way you are coming today. You'll come as it is. You will carry a register which should not be, just show me your registers like this. These are decent sizes registers what you have. It's one time see. This type of copy if you'll make, give me a register. If you have this, maybe 100 pages are there in this. Maybe I think approximately you will have how many pages? To carry it's easier. 100 pages. This is also decent size because you have a length here. But I think by the end of the course you might have 7, 8 or 10 of the registers of this. So if you do not feel burdened, carry a decent size register so that the number of books are less for you, because when you revise back it becomes very difficult. Maybe at the end few days, I tell you very frankly, you'll have such a craze. Oh, let's go AFM class. Subject will come SFM. I don't know why. It will take me some time to go, because the way the year changes from 2022 to 2023, we have a habit of writing 22. Maybe sometime I might use SFM, but those who are listening, please don't worry. We are doing AFM only. And in fact, Institute has done nothing. They've just changed the shirt. Next day morning it has happened. Otherwise, you'll find more or less everything. But yes, they have done some beautiful parts in it, which I'll discuss as when we go. Today's objective is not to discuss any kind of the chapters or individual chapter, which I'll discuss anyhow. Now carry a decent size register depending on, since you are also very thin, so you carry for you this is the appropriate size, or its back would be very heavy. So that would be there. Second is when you start this subject, you'll feel, oh, we'll study very aggression. First chapter, I'm telling you, first few classes, very aggression. What is happening? Second chapter comes, slightly slow down will come. In you, not me, because I have to come anyhow. Third chapter will come. Third chapter. By the time we'll reach fourth chapter, which I see in the batches, what was first chapter we did? This is exactly will come. I don't expect you to have this kind, provided you are taking maybe 1 or 2 classes. And I am 100% presuming our attempt is in not before May 2024. That means you have appropriate time to digest the subject. And you should be thankful to the institute. They have somehow tried to reduce burden directly or indirectly. Now what they have played the game accordingly, etc. We are not discussing that. But you should be able to digest the subject. And I'm saying my subject, I'm very sure, over the years I've seen, it has its own beauty. It has its own beauty. Even if you do not want to do mathematics or extreme mathematics, still you would be able to do a lot of things. Means I can, after 4 days time or 5 days time itself, I can tell you, you will be able to stand in between the general public and you will be able to speak out the subject. Subject means, for example, if I am standing between the engineers or doctors, I cannot suddenly say, oh, I am studying the corporate business valuation, I am studying this chapter, I am studying this, you cannot. But they talk, for example, yesterday movie was released. For example, I'm just taking the name of movies. Few movies were released. Movie? Friday. Yesterday was a Friday, today is a Saturday. Few movies were released. Maybe you are not interested at all. Sir, we are sincere students. We do not watch movies at all. I agree you do not watch. Even I do not watch. 2 English movies came out. Decent English movies, what I heard on the radio. But my objective was not hearing them. My objective was the public who went to see those movies. One was Barbie, I think. And second was for name also I cannot speak of. What was the name? Anyone? Hammer. Very good. You can speak that name also completely. Very good. This is exactly what I need in the class. Now, what you have to do is just analyze the collection today and tomorrow. Monday you will see the impact of it. Monday you would be able to see the impact of it on the some of the listed company shares, which would be PVR maybe, which would be UFO movies. UFO movies is the subject which is the It's a UFO movies is actually a which provides services, some kind of services. I'm telling you the names, for example. This is not something very odd I'm talking to you. It's a general common sense. Movie came, someone discusses, you go to someone and says, no, no, morning I go for AFM class, evening I go F4 class, in between I come and sleep because I do not have a time. Homework also I do not do. Homework also I do not do. When is the time to watch a movie? Now the one way of talking is this. Second way of talking is yes, movie released. Yeah, very good, very good. I have heard about the movie. Now I think the moment in the price of the share should have come that's reflecting blah blah blah. The moment you speak, the second person, oh, what a knowledgeable person. Maybe you have not seen the movie. I'm saying I cannot even speak the name what he said, the name of movie. But objective is now you will matter, sir. How does it make a difference? It makes a difference because when we look at these kind of a things, movie has come today. It is the month of July. The numbers of July, August, September would be reported in the month of October, or maybe you have a deadline till November 15, the second quarter result, for example. But the market estimates beforehand what will be the numbers, what will come in the month of November or in the after the September quarter ends. So that is called a valuation. That is called your analysis. For example, what is happening today is not something which everyone knows. Something is happening today, everyone knows. For example, a defense, we are growing aggressively in defense. Your prime minister is moving around the world. Now, one more thing. Any discussion when I do on the political parties, do not assume he's a pro BJP. He loves Aap Aadmi Party. He loves Telangana government. Since it is not so, any decision which I'll talk about the political party will be from my subject point of view. Now, what I was telling you is, for example, I tell something of the policy of BJP government or maybe your state government or maybe the Congress government which they have done earlier. That would only mean that how the capital markets have evolved over a period of a time. For example, your prime minister is moving across the world. He went to the US, he went to the France, he went to some other country. You'll find every time the defense sector comes into the play, which has become one of the lovable sectors. Sectors is industry, for example. BEL, HAL, these are some of the listed companies we have. That means the India is trying that we become self-sufficient in the defense equipments and we are able to supply. And you will find the share prices of that companies have moved aggressively in the last 1 year. Although maybe the numbers are not reported as of now or have come very good, but they have started showing that numbers. So you should be reading that out. And what I mean is when you go back at least 10 minutes you should have with you that you are able to spend on yourself on general awareness. And general awareness is when you open the paper, it's not that you open the paper, oh, bank was looted this much, A person killed B person. These are not the news item I expect you to read, because as a student of finance, you should be reading out the numbers like the what company reported what numbers, what was the expectation, which sector is growing. For example, we are moving into renewable energy, we are moving into electric vehicle. So what is happening? Now, these are few things which I expect to you, although you might wonder, sir, how is it relevant to the subject? You'll come to know. Today itself, I'll show you that how it is relevant to the subject. My objective, and don't worry, I'll not subject every day so much on this. It's only I have to make you or ignite you that what you actually learn and what you actually study, they are both related, but we are not moving to that kind of a scenario. For example, one of the topics I'm doing in the evening, the M&A and the corporate valuations I'm doing this topic. 2 days back, Reliance has demerged one of the businesses, I think. Geo Services, if anyone has read. Geo Financial Service. Geo is a phone, we know. But they have done something which has brought a change in the Nifty, for example, which I'll give you maybe work today, go back and do on your own. Though I'll tell you what Nifty and NSE markets are, because they will come to me in some of the formulas where they come. Now, you should be knowing what is happening there, what they have done, how the valuation of that work was done. That valuation you would be studying in the accountancy also, FR also. I don't know which chapter you study, the demerger or something. Maybe you learn their accountancy. We would be learning the valuation part of it. That is the subject which comes out. So I'll keep talking to you in between these few things from you. I'll continuously speak today. Continuously means one after another, whichever comes to the mind, I'll speak at random maybe. But few formulas we'll be doing. Few formulas from the intra IPC I'll do so that you do not feel we did not do anything. We went 6:30 a.m. and it was like a pravachan which happened. What you call in English. Few words are very difficult to convert in English. So it has happened. We learned. We sat there. Empty book we go and empty book we came back. It will not happen. Don't worry. We'll do something. Now, I'll keep telling you few things before I move forward so that I do not forget, because I have not written anything to tell you what has to be done. Register, one thing I told you. Second is calculator, which is very, very important. And try in your calculator, you have a GT button. GT is, maybe these calculators are good, or if you do not have, don't worry. Self-realization in some time will tell you why we require that kind of a calculator. So no need to worry. Whatever calculator you have, but do not have that pocket calculator, small one. Use a calculator which will be using the exam so that you get habitual of it. Carry 4-5 different ink color pens, not a single color pen. For example, maybe some of you have a habit of carrying a black pen, because the questions what I'll do, I expect you to write by single color, rest you do it by different color, means so that it looks slightly beautiful. For example, today when I write it, it should feel like you itself, that what you've written you can go back home and read at least. Otherwise, life is black and white only. For a CA student, life is black and white. You cannot have. For you, wake up in the morning, AFM class, some will be studying in the live stream, some at random Google Drive, and then go to the article sheet, then evening come back class. Life is gone like this only. Leave apart the movies. So at least what you're writing, you should feel like that I'm able to read that out. That is one thing which I need. 4-5 different ink color pens. Number the pages 1, 2, 3, 4 on the top of the copy, so that when you do any question in the book, because by the time we end the course, we don't know, maybe 500, 700,000, how many questions you'll be covering in. Maybe some of the chapters will have a 120, 100 questions, 90, 95. So these type of questions you'll have. So that you mark in the book that this page number we have done, so that when you revise, you will be able to do it. Any kind of a question which is very important from the revision point of view, repetition point of view, or from any point of view, I'll automatically tell you, and you can mark accordingly. So these are few things which I'll require from you. Rest, as and when it comes in the mind, I'll keep telling you. But one thing is for sure, I would expect you to speak. Speak not necessarily in the class you speak. It's when you go out, make friends amongst yourself. So that what happens is when you go outside the world, the objective of the classes is what? Maybe you should have the talking habit. It's when you go out, try to be adapted to any kind of a situation. If you are able to adapt, I'm saying you'll make one of the best person in the CA fraternity. The problem what I see is the talking is less. You have the knowledge, but you're not able to express. For example, I told you about the movie. If you do not know even the movie, just have the reviews from someone else. Who knows you watched the movie or not? No one knows. If you watch the movie, very good, you can give your opinion. Even if you don't watch, you should have your opinion. The opinions are very, very important. And we should not be fighting. It is a debatable what we use attitude. Debate is you have your own opinion, I have my own opinion. For example, if we speak on the company, you can have your own opinion, how the companies would fare, how the numbers would look like, how the economy would do, how what kind of a monsoon will have, what will the impact on the farmers what we have, ITC will demerge its business or not, the valuation, the way it is moving. So these kind of, you should have your opinion, and that opinion would only come when you read. Just spend time on the reading, and it's not necessary if you have to open up the physical papers. Any paper at your home comes, whether it comes in English, Hindi, Punjabi, Telugu, Urdu, any time. I am very sure the just before the sports page on any newspaper, 2 pages are for business section. I'm not telling you go and read today itself Economic Times, you get excited and ignition happens. Economic Times, open up first news itself. Reliance misses estimates. What is this? You might not be able to get that. It's not that today itself you have to go back and open that up. Just start reading a habit, so that your family would also feel like he's changing, he's improving. Newspaper he's reading, and you have a habit of watching everything online now. So at least you can, in a one day, what has happened during the day, you can watch that out. Maybe political, maybe entertainment, maybe sports, or maybe you have market related, anyhow you have. And the companies which you go, which I'll tell you that where you go for the articles, or you have done, or your friends are, what key items you have to keep a track. Maybe it's not today's class, because otherwise I'll not be able to finish off my introduction class itself. So it was just a brief framework which was there. For me, my name is Mohit Jain. I'll just do briefly. My name is Mohit Jain. I have been teaching almost for, if I say CA, it has more than 12 years, I think. Maybe more than that, I don't remember. But teaching per se is how many years? It's 2023. 10, 20, maybe more than 28 years. But do not go by my age. Age is very small. I'm under 40. Do not look at, but sir, you look very old. It's okay. I'll show you that everything. I started teaching when I was in 6th class. So I somehow was teaching for some good cause. Then 11th class, Some of my teacher said you can teach our kids. So from there I formed the habit, and then soon after that I started teaching somehow. I tried leaving also. I tried leaving and going into the equity markets. I worked in equity markets, iBanking. I've trained a lot of iBankers, equity markets. I conduct some training for the young Minister of Corporate Affairs also. I've taken them. I keep taking it. Now I shifted my base to Hyderabad. So daily I used to do that. When you get the book, you'll come to know. So not to tell you more about it. Basically, I at the end of the day, I thought teaching is the best thing which I can do. Though I can train iBankers, iBanking I'll talk to you when the chapter comes in respective, what kind of a field it is, merchant banking, which the deals happen. But ultimately I realized teaching is something, for example, you will also feel something which will make you wake up early in the morning. So you will also get that kind of a passion which comes out. From my side, we'll try that we respect the subject in the best possible way. When I say respect the subject, I mean whatever I can give you, whatever my experience has taught me over the years, I'm an aggressive reader of the equity markets. I can tell you very frankly, I can eat, drink, and sleep equity markets. Even if at 2 o'clock you wake me up and ask me about a company which I have been seen, I can speak out something on that. But with you, I have a limitation of a time, so it is. But obvious, we cannot. Our core objective we will not be forget, that is to score marks. No matter you love or do not love, scoring is one thing and subject is the one part. Second part is the learning process which automatically will develop. How you take it, that's up to you. But in between, for example, in the flow when I'm doing something exercise, I'll keep taking the names. So automatically you have to see under what circumstances we are talking and what kind of numbers we are talking and why are we talking. For example, if I speak about the US and the Indian market, for example, we are in the growth phase. India, US in the saturation, the kind of inflation number we have seen, it might look very odd to you, but that will become part of your, the dollar, for example, the $1 has become 82, 83 range we are ranging. There has to be some reason behind it, which is part of your course. So you will automatically come to know why it is happening and what is the purpose of it. Is that fine? Now let's come back. If the subject is AFM, approximately I feel, which I'm saying, maybe around 220 hours, approximately 10% deviation, maybe on the higher side or 5% on the lower side, which is very rare. 220 average you can assume, it could be slightly higher also. And will take some time and we should be able to finish it off in decent time. Means decent time is approximately around 80 85 classes, even if I, because it will take some time for me to make a framework for you, go slower, adapt it, and then you will maybe in the between, if you feel like we can have a test for you, then everything would come accordingly. So that's approximately we'll have. So do not pressurize me that quickly finish it off. It's not a crash course for sure. Do not pressure me. It's not even a fast track, for example. And I'm assuming you are studying this subject for the first time. So enjoy the beauty of it. Some of the things, for example, you might find today, for example, these formulas we know. I'll try to add some ingredients that formulas you knew, I know, formulas you knew, but something was required from me. So topic, leave it to me. Subject, leave it to me. Length has increased from the previous, for sure. It has increased because altogether one topic has been added, and maybe you can say 20-25% addition has happened. Deletion, nothing has happened. Nothing has happened. So subject has increased and mathematic topic only has been included. So anyhow, that is related to your intro also, so you will not feel that pressure which comes out. So subject is AFM. Today's task is you can write the introduction and we move back. Let's come back. AFM. It's Advanced Financial Management. It was earlier SFM. Now in this we are doing, let's put down introduction. Today's task would be to learn some formulas. Put down terms to remember. Terms to remember. Terms to remember. First term will be using which you've done, earning per share. These are all formulas you've learnt in the inter. Earnings per share. EPS. Tell me the formula, please. And feel free to speak anything. I'm saying it again. Feel free to speak anything, even if you're wrong. How does it make a difference? It's better to be wrong in the class rather than to be wrong at somewhere outside. So feel free to speak anything. Tell me the formula which comes out earning per share. Earning for equity shareholder divided by number of equity shares. Now when I say it's a profit for equity shareholders, preference shareholders, even if you have learned that they were part of shareholders fund, it's perfectly fine. But from finance perspective, we treat them as the debt because they were fixed rate of a dividend which comes out. So from perspective of the earning per share, it's clear cut profit for equity shareholder divided by number of equity share. What you call number of equity shares in the accountancy, we call them as the shares outstanding. The term used practically shares outstanding. So let's write the formula, please. It's equal to profit for equity shareholders, the number of equity shares, Now number of equity shares, we will call it as shares outstanding. Writing, I'll take your forgiveness. My writing is fine enough, but you need to fall in love with writing. It will be decent writing is there. It's okay. It's not that bad. Shares outstanding. Second, dividend per share. Dividend per share. Tell me the formula. Dividend per share. It will be equal to what? Total dividend for. The name looks very odd. AFM. I don't know. It will take some time to come on. You have to convince yourself you're teaching something different subject. I don't know. So I asked him to bring a book. This book you can, while going back today, carry it with you or we will issue to you. We will require for the next class. Okay. So, I don't know if you are looking at this subject for the first time. For you, it's AFM looks very odd. But it has been SFM. The mind itself, I don't know. After speaking, you have to convince yourself no subject has changed. Dividend per share. Total dividend for. It's only for equity holders. Please remember. Total dividend for equity shareholders divided by shares outstanding. Divided by shares outstanding. Next formula will have very important formula. Maybe theoretically you would know, but it has a lot of practical relevance. Dividend payout ratio. Dividend payout ratio. Dividend payout ratio. Anyone who can tell me? Very good. Formula wise, we are very comfortable. Dividend paid to equity shareholders. Payout ratio is exactly what I meant was the way you'll speak, you'll create the formula. Payout is proportion of the earning which I pay as a dividend. Proportion of the earnings which I pay as a dividend. That means it will be DPS by EPS into 100. Means I want you to speak out. For me, the relevance of this formula would be, I'll show you some companies today We have some IT sector companies, we have some manufacturing, we have a telecom sector, we have different sectors. Now, some sectors, some companies will have a high payout, some of them will have a low payout. And when once I'll show, I'll ask you the reason for it, and then I'll dictate what comes out, because retention ratio and payout ratio will start reflecting to me that under what circumstances company will have a, or which type of a companies will have a high payout, or because as of now you'll feel that this is the ratio, but when I'll move to the valuation side, that language will, some type of case studies, some questions we have type of case studies with us, which I've already included here, which will tell me that if companies was paying a low payout and suddenly some change happened, they have increased the payout, what is the reason behind it? For that, I need you to be very comfortable reading. Payout, when I say payout, is proportion of the earnings paid as a dividend. That means what I earn, for example, if I earn 5 rupees and I pay 2 rupees, my payout would be what? 2 divided by 5 into 100. That becomes approximately 40%. 40% is payout and 60% would be retention, which comes out. Let's write down in the words, please. Proportion of the earnings. Proportion of the earnings distributed in the form of dividend. Proportion. Earnings distributed in the form of dividends. Proportion of the earnings distributed in the form of dividends. Formula would be what? Dividend per share divided by earning per share into dividend. Fourth, relevant ratio with this would be retention ratio. Now, you tell me, how would I read retention ratio? How would I read? Proportion of the earnings retained in the business. Very soon you will come to know the relevance of this, please. Proportion of the earnings. Earnings retained in the business. There are two formulas you can create. Two formulas you can create. Tell me. One is, you can have 1 minus dividend payout ratio, or you can say EPS minus DPS. It gives me retention divided by EPS into 100. Basically what we have, retention ratio plus DPS. If I put a note here, retention ratio plus dividend payout ratio would be equal to what? 100%. Now before I dictate a note, I want you to get I want you to be comfortable seeing that number. I'll be moving to the stock exchange website, what stock exchange is, etc. Maybe today itself we'll try to cover it up so that you get adapted to the some of the basic parts. If you've copied that, let me know. I'll just move forward from there. Let me look at the BSC. It's visible to you? Yes. That's a Bombay Stock Exchange. What is BSC? What is 66,000? And so, what does it mean? We'll see slightly. Let me take a company which was in highlight all yesterday. Infosys. It's a very rare circumstance you'll find such a fall which comes. I think we should be able to speak today, or at least we have a time till Monday at least, because market is closed today, market will be closed tomorrow. Monday also, by the time we finish off the class, it will not change. So before that, I'll speak to you what has happened. You would be knowing. It's a very rare circumstance you find 8% fall. It's a very rare circumstance. Actually, fall was bigger, but I think it has closed this. Now, that is not the objective. Objective is Infosys is an IT sector. Sector, when I say, it's basically, can you see the sector here? Industry. What you call industry? We technically call it as a sector. Now my mouse will not move. This. Now does it move? No. This is industry. Can you see on the extreme right? Industry is what? It's an IT company. Everyone knows Infosys is IT company. Earning per share. How much is the EPS? 58.61. TTM leave apart. TTM is basically trailing 12 months, means last 12 months. They calculate, which will see what is the cash EPS, P ratio, PB, ROE. Some of them will discuss today itself, and some will come as we move forward. 58 rupees they earn. Now let me see how much they pay as a dividend. Corporate actions. If I assume the same way they would have paid, let's calculate 2022 what they have paid. Even what they have paid in 2023, can you see the final dividend? You would have done somewhere. What is the final dividend basically? Interim dividend is when you announce and pay immediately. Final dividend is balance sheet closes, approval required, and then you pay. So in 2022, if I ask you, they paid approximately 16.5 plus 17.5. I'm assuming that average. How much that comes out? 16.5 plus 17.5 total 33 something. It's not average, it's total 33, 34 if it comes out. Now how much was the EPS? 34 rupees they paid out of 58. How much it comes percentage? 64. That means whatever they earn, they pay out how much? 64 percentage. Still the price fell by 8%. Means there is some issue which will be guidance issue which was given by the management going forward, which I'll discuss. That means this industry is paying 64. Let me check one more company. Any comparable company in your mind comes? Which one? Vedant. You have taken very odd name. They'll not come tomorrow. Take a name which common name comes in. Infosys. TCS, TCS, HCL. There used to be a company called Satyam also one time back. Satyam also, but it's not there. What he said, I don't know. Vedant is in fashion. Vedant fashion. That's a Vedanta. Vedanta is that is not a comparable company to it. Comparable means the company which is comparable. What I'm saying is it's IT sector. Sir, how do we know? By the way we have to see. You do not have to spend so much time. When you are a new learner, below this is actually a page. You can see that page. It's a what I did was I went to the bsaindia.com. This I expect you to be able to do in the office. When you go for the articleship, anyhow, all day you keep doing IT return, GST return. In between time, you can have. No, I'll not tell today because it's a public. I'll tell someday. Now, what I was telling to you. For example, this is the BSc India page we have. Now, let's suppose today is the first day for you. Maybe I do not know how many of you seeing BSc India website for the first time or opened. Very good. At least we have two. See. Now let's suppose you open today. I told you open today. The problem is the moment we see something new, I might not be able to go and see it tomorrow. Or for example, I asked him what is the comparable company. Comparable is which is in the same sector. Same sector. Now, if I do not know, let's suppose what I do is I go below. They have a lot of data which, if time permits, I'll discuss at least to that extent that you are able to give a base framework of how do we research about a company. Now look at this part here. Below that can you see that there is something called peer group. Can you see that? Now they have given some companies. Infi, this is Infosys we have opened. Then second company is what? TCS, Wipro and HCL. That means comparable companies are these companies. If you have to see that company, it will be there. Now for example, what he said Vedanta, let's suppose Vedanta, it's in minerals. It also announced result I think yesterday only. Now if you look at the sector it has, the industry, extreme, right, industry, diversified, means it is not an IT sector. If I want to see which are the companies which are comparable to it, I go down again. Now they have given only one company. Maybe there could be few more, but they have given this company. You might not have heard the name. This is how you start learning about the names of the company. Although this was not the objective, but someone, if you want, for example, let's suppose you're doing audit of any listed company and you want to see that what are the comparable company to it. That comparable company will be very important because we have the case studies in your course. By looking at comparable companies, we do the evaluation. For example, there was IPO which closed. For example, IPO comes out. Any company when lists new. Now, how do you think the pricing of that company happens? And which is relevant part for your course, please. I'm saying which is relevant part. During some time we'll be doing a case study in which by looking at industry or a company data, I have to arrive the valuation of an unlisted company. How do you think unlisted company valuation is done? What they do is, or any kind of a company, for example, when they come in that sector, they arrive at some number and they say, if I was also listed, these were comparable companies to me, and then they look at some ratios, and accordingly the numbers of the new listing or new valuation or any kind of the when they're raising a money, for raising a money they require the valuation, that they require what is our value, and proportionally how much amount should I raise. So these comparable companies come handy at that point of a time. Now that will become a complicated for first day at least. Let me go comparable was TCS, let's suppose. TCS, another big one we have, and look at the EPS, sorry, 112 rupees, that's the earning per share. Let me go back. Look at the dividend what they have given. What they gave in 16 January is part of last financial year only. 8 rupees 27 was a special dividend. 8 was also dividend. 8 plus 8 plus 24 plus 67. I think they have paid more than what they have earned. Almost 100 percentage. Almost 100 percentage. That means whatever they earn, they pay. Now, this is which sector I have shown you? IT sector. One sector you choose from your side. Any industry, you tell me. Real estate. They do not even earn. What will they pay? Let us still see. They do not even earn. Real estate, tell me the company. Tourism have started doing good of the late. Let's say tourism. I'll show you. If you go to Goa, Advani Hotels. The names of the companies which I take, I'm saying it again. Just keep on your track. Advani Hotels. The rent of one night of the hotel which is done maybe 40-50,000 in Goa. I have never been to Goa, but I have been tracking this share for my internal purpose. This is which industry? Hotels and resorts. How much they earn? 6.19. And this sector is one of the beautiful sectors which I see you should be working on, or should be tracking this sector, because India wants, the government wants India to be a tourist friendly country. So the way hotel industries are moving after the COVID, I don't know what has happened, the evaluation part. Now, if I look at corporate action, how much dividend they paid approximately? If you look at 2023 interim, they have paid 1.4, or maybe you can assume 3 rupees or 2 rupees. Payout would come approximately, although this is a very high payout, but payout they are just earning, payout would be in 20-30% range, which comes out. Another company which I can tell you in the hotel industry, Sinclair Hotels. Let me see, but the numbers was bad last time. Sinclair. This is one of the debt-free companies, I think. Sinclair Hotels. Hotels. Let's see your luck. This sector. I'm saying with you, this is the first time I'm opening tourism sector. I've never shown tourism sector, but I hold some of the shares. Not necessarily these, but tourism in the last few years have shown some aggression. How much is EPS? 11.5. Dividend. Approximately, even if you add both of them, it should be 2.5. 2.5 divided by 11.5. Tell me the payout ratio. 21. Payout ratio is much lesser than the IT sector. Let's go to the banking. Or not banking, let's go IT, banking. Automobile, let's go. Maruti. Automobile, you said, one of the shares which started moving yesterday. Ukal. I think it should be automotive. Yeah, very good, very good. Ukal Fuel. Now these names would be very odd to you. What kind of companies I'm taking? I'm just taking the name of companies because what you know the companies, what actually are the companies. It moved yesterday only. It has come to 52-week high yesterday only. 15% was move. I don't know why it has happened. Now this is in which sector? Auto component. Although they have reported bad numbers, so I'll not discuss about the payout ratio because payout ratio could be good. Some of the companies like Maruti you have. What else you have? Tata Motors. Maruti Electric. Why are we discussing this, sir? Last I'm showing you, and then I'll come back to my note. Look at the Maruti EPS. Maruti is, this is Maruti, around 9,000, 10,000 rupees share price. Earning per share is approximately 266. Let's look at the payout. Look at the payout. It's only once they pay. Even if we assume they have paid 90 rupees, 90 divided by 266 or 270, how much it comes out? 30. It's still very, very high. It is not the way they pay. Now understand the objective, please. IT sector do not have the capital expenditure opportunities. Any companies which have the option to reinvest, they will not pay the dividends, or they will pay very, very low dividends, because they will keep reinvesting in the business. Any companies which become saturated or matured, shareholder can be happy with two reasons. For example, you are an article, and please do not feel if I use the word article, I was also once an article only. With due respect to articles and the chartered accountants, you're an article. When you, maybe some of you would have qualified very recently, and someone would have said, you'll go for what, articleship? You said yes, articleship will go. And then they said, you ask me, sir, I need to go for articleship. I ask you a question, do you need the money or the what? No, sir, work is important. Work we require. I ask you again, stipend also you need. Stipend, sir, is a secondary. Work is important. And in 10, 20 or 1 month time, you realize money was only important. Maybe because work you do the same. But if that firm starts giving you different kind of a work, the growth will happening. You will not feel the pinch even if you are paid low stipend. But you are not paid a stipend and work also you do repetitive, you'll not be happy. That's exactly what happens as an article, or maybe I'm working with any kind of a company. Let's think of the companies now. I'm a shareholder of a company. Company is not showing me a growth. Company is not showing me a growth, and neither company is paying me dividend. Why should I stay with the company? It means the companies which have a low growth opportunities or almost no growth opportunities, their payout ratio would be higher. Why TCS, Infosys are paying such a high dividend? They always have been paying this industry. One, they do not require anything for the capital intensive, because capex is not required for them. Unlike the Maruti, or you have to set up a plant and so on. So anyhow they have to high. But if they have cash in their balance sheet, and they do not do with that anything with the cash, either they should acquire some businesses. If they do not do, shareholders will not be happy with them, that at least distribute us, because cash in itself is not doing anything in the balance sheet. So you might find high payout ratio in those kind of a companies, or in the countries. For example, if I go to US and the European countries, you might find payout as high as 100%, because growth opportunities are less. In case you have a growth opportunities, in those scenario, your payout ratio would be lower. That means Maruti is still paying higher. This is not the kind of a payout they pay. Any kind of a company which comes new and which are in the expansion mode, their payout ratio would be very, very low. That means whatever they earn, retain and reinvest in the business which comes out. So payout ratio will tell me, very frankly will tell me, that if someone is paying me, or for example, if someone is paying you a very high payment, you should understand maybe the work profile might not be good. Exactly same way shareholder would be happy, either pay me a very high dividend or give me a high growth, I would stay back with you, else I have to leave out from you. That is exactly what happens. So in interviews, they would definitely ask you when you go for it. In questions, I'll show you in few of the, one of the case studies will have this, that the company was growing at a very high rate, payout was less, now the growth will come down, payout will increase. That will show you that exactly he's talking the practical sense. And when you look at companies across, sector across, when you look at countries across, the saturated economies, when we say, means which have already grown, the European or the US economies, or India, for example, it's a growing phase. In India, you will find majority of the payout would be lesser. Else, if they have to expand, they will be taking a loan, which will be a dent on the balance sheets which comes out. So let's put down a note, please. Below that, let's put down a very, very important note. Companies which have companies which have low growth. Companies which have low growth will have high payout ratio. Companies which have low growth will have high payout ratio and low retention. And low retention. Whereas, whereas companies which have high growth prospects Companies which have high growth prospects will have low payout ratio. Ratio and high retention ratio. And high retention ratio. Now I'll take two more ratios, then we'll do a small example on it. Companies which have a low growth will have high payout ratio and low retention, whereas companies which have high growth will have low payout and high retention. I hope you've written right. Low growth, high payout, and high growth, low payout. That's fine. Fifth, how many ratios we have done? Four. Fifth, let's put down. Dividend rate. Dividend rate. Anyone who can tell me the formula, please? Dividend rate. Dividend rate, yes. Let me show you something. You keep doing it. You tell me dividend rate. Dividend rate. Anyone who can tell me the dividend rate, please? Let's come back. Let me show you something. I look at company called MRF. You know the price of the MRF? One share? Approximately 1 lakh. 5,000 rupees stipend per month. 1 lakh divided by 5,000. Almost entire article one share if you have to buy. So it's a 102020. It's a 1 lakh rupees per share. Now this will also have a significance. We'll come back to it. Don't worry. Dividend rate. Now I'll show you something very interesting. MRF paid how much dividend? 169. Can you see that? 169. If you open up any newspaper or when the news comes in, how the news will come in the local newspapers or accounting terminology, they'll say MRF dividend was once 169. You think 169 was paid, na? Look at the dividend percentage. 1690. And the moment you see this much percentage, you will be fascinated that, oh, what a kind of a dividend they are paying. Now understand, this is called dividend rate. Dividend rate is with respect to face value. Dividend rate is with respect to face value. What is the face value of this share? 10. This also has significance that why the market price is 1 lakh and the face value is 10. By end of today or next session, depending on time, how much I speak, I'll be able to cover it up. Everything I'll be covering up, whatever I'm showing you. How did you calculate? You know, dividend paid was what? 169. 169 divided by what? 10. 169 divided by 10 into 100. Tell me what percentage comes? 1690. Now, if anyone sees this kind of a news which comes in, dividend declares dividend of 1690 percentage, you'll be moving and you'll go and tomorrow maybe you will incline to buy the share. Now, the moment you go, it will come at what? 1 lakh rupees. Actual return is what? 1690 and how much? 1 lakh. Tell me how much it comes? 1690 divided by 1 lakh. Actually, if you see, your return is 0.169. Now look at how the finance market works. Look at this. Can you see dividend yield here somewhere? 0.17. That is 0.169 something comes. The market uses the word dividend yield. Yield is also return. Rate is also return. Rate is a return with respect to face value. Yield is a return with respect to the market price which comes out. So please, when the accounting, when you do, or maybe if you are doing an audit of a listed company and then declaring dividend, the language you will write the rate with respect to rate. And the market says that if I had to acquire, if I go today and buy the share, it will come at 1 lakh. My return would be only 0.17, which comes out. Sir, what is the difference in the face value and share price? We'll see that also. You have done in the IPCC also enter, but you will not be able to recollect that you have done the why face value 10 and why 1 lakh rupees share price. What is the difference between them which comes out? and why the companies can have or what kind of a face values we can have, that everything will come back. Don't worry on that front. Let me just make out two ratios. Dividend rate, let's put down with respect to what? With respect to face value. With respect to face value. Formula you try to create, dividend per share divided by face value into 100. Sixth part. Dividend each. With respect to what? With respect to market price. Formula would be dividend per share divided by, we call it as, you write full form please, market price per share. At least once you should be writing full form, market price per share into 100. We interchangeably call MPS as, we can call it as a price, we can call it as a share price. We can call it as a price, we can call it as a share price. It's one and the same thing. Dividend rate, dividend yield. Now I'll just take a small example on this please. I'll just write down the data points so that at least 6 ratios should be there. The objective is not the ratios I'm saying. It's only I'm trying to get adaptable to you, you get adaptable to me. That's the only objective of today's class. But yes, in between that, since you've come so early morning, weekend you have come. For an article, I know weekend is as good as the normal day. But weekend you have come, so you should learn something and go back. That's the only objective which comes out. And please remember, I hardly have a habit of criticizing anyone or institute also. I do not criticize because I am also a chartered accountant. I know one thing for sure, if I am standing here, it's because only of that institute which is there. So maybe just for the fun sake, so that you do not sleep, I do not sleep, I might tell you something common. So that could be the only way. Otherwise, this profession, if you clear up CA and go out of that, the world will know one thing for sure, that there has been no second question mark that you have not worked hard. I'm sure. Rest any profession, with due respect any profession, but CA has been one of the professions which everyone knows, if he has cleared by hard work. Smart work if I do, or if you do, then there is no deadly combination with that. That's something which you have to learn. At least I know financial markets, since world is opening up, we are no more in the accounting side. We do the accounting, we are good at accounting. In fact, since you're so good at accounting, and if you add slight of this is all accounting, what I'm doing, what I'm trying to do just is, just think of logically, I'm just trying to do what you have learned in the accounting knowledge. We're just trying to merge the financial way of talking. And the moment you get that talking term, I'm saying no one can beat you. That is exactly where you have to stand. So the objective of these ratios is get adaptable way of looking, because you certainly have a habit, accounting standard, Ind AS, law, legality. I'm trying to move out of that because you have all the subjects in one format. Audit, for example, standards, procedure example. For me, there are no standard procedure. If companies, for example, I showed you call fuel, maybe for 1.5 years it did not move, it was standing at 120, 130. If some event will take place, that will become one of my favorite companies. I don't know. So, I'm just telling you, Suzlon, for example, has been disastrous in the wealth management, wealth destroyer. Although should not buy, please, I'm saying any stock which I take for the in the class, it's only for the purpose of educational. But suddenly in the last 1 or 1.5 months, the price has moved from 7-8 rupees to 19.8. That's almost more than double which has come. And you will go back and check what is happening, the kind of orders they are getting. But I'm not saying that go back and tomorrow buy it. For example, Idea, although that's, I mean, I should not be taking the name of that company itself. But anyhow, what you love more, that pinches more when it does not move. Idea, for example, fund will come, fund is not coming. And the moment fund will come, I'll show you. Maybe I hope your batch is lucky enough that 8 rupees or 7 rupees 90 paisa, which is closed yesterday, same date might happen 10, 11 rupees price also. We never know. So how can a share move so much? FNO stock can move any kind of rate. The futures and options, derivative stock have no limit. Otherwise, rest of the stocks have limit. Some can move 10%, some can move 20, some can. What I'm saying is, you should be reading that part out. Although nothing will change. Idea has a debt, external debt of standing 2,10,000 crores approximately, which is not actual debt. There is some other things which are there, which we'll discuss at some other relevant stage. But the debt will not change. But the intention would be, for example, they'll get a lifeline. They'll get lifeline. For example, I'll just tell you, you've seen Avatar movie, Avatar, Avatar, what you call it as in English, Avatar. First part. In the first part, Jack, his name is Jack, Avatar. Do not have a habit of watching. Leave it, Nalaik. Come back. The Nalaik also, if I use a word, do not feel bad, please. Nalaik means it's only love language I'm using for you. It's a, with love I'm saying Nalaik. If you're Nalaik, I am ultra Mahanalaik. Being a teacher. So do not go back home and tomorrow and say, sir, we searched in the dictionary, Nalaik means useless fellow. It's not so. It's only something which comes. So come back. You have to, we need to have some common topic to talk, otherwise subject is something which anyhow I have to talk. Let's put an example. Let's put an example. EPS, calculate, in fact, calculate, put down, calculate, this was calculate. EPS, second was DPS, third we learned was what? Dividend payout ratio, fourth was retention ratio, fifth was dividend rate, and sixth dividend yield. From the following data. In fact, my advice would be you only create some numbers, please. You only create some numbers. In fact, I give you create a question also. Try creating a question. Let me. In fact, you only create a question. Let's do one thing. Let's put down this one. Earnings I am taking. Let's suppose any numbers you give from your side. Let me only give sir. First day. 50 lakh total dividends. 20 lakh shares outstanding. 2 lakh in number. So we can find EPS, we can find DPS, we can find payout, retention, face value. Okay. Share price. Share price, price, market price per share, one and the same thing we have. Okay. Calculate for me the numbers. And do write the formulas. Do write the formulas, please. Otherwise, the objective of the exercise would be gone. You write the formulas, I'll directly write EPS, how much will come? 50 lakh divided by what? How much do we get? 25 dividend per share. Divided by 2 lakh. How much do we get? 10. 10 rupees. It's okay. Why do you worry? Then we have dividend payout ratio. Proportion of the earnings paid as dividend. You earn and speak the same way. You earn 25 rupees, you pay 10 rupees as dividend. 40. 10 divided by. I hope I am right. 40%. Then you have retention ratio. 25 minus 10 divided by 25, or you can say 100 minus 40 also will give you 60. How much do you get? 60 percentage. 40, 60. Next is what? Dividend rate. Dividend per share. Sorry, tell me. Dividend per share divided by face value into 100. Dividend per share is 25 divided by dividend. Oh, sorry. Dividend is 10. 10 rupees dividend. Face value 10. That means 100%. Now, how can we sir pay 100%? 100% you can pay. How does it make a difference, please? Face value of MRF was only what? 10. You're paying how much dividend? 196. The face value and dividend has no relevance. Face value, because companies over the period have the market value has increased, their base has increased, face value is still the same. Face value, it is as good as when you purchased the property here 20 years back, the value of this building would have been 1 lakh. Now the value of the building is 1 crore. Let's say rent what you earn, maybe more than 1 lakh per month you are earning now, because valuation has changed. So do not get about, or do not worry about it why it is 100%. Then we have what? Dividend. How much do we have dividend? Dividend per share by price or market price or share price, one and the same thing. 10 rupees divided by 18,200. 12.5%. 12.5%. Next ratio is a very, 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 very important ratio, please. It's a very important ratio I'm putting, which will be with you during almost all the chapters, leaving apart few, with you after becoming CA till the end of your life. At least you are in the equity markets, or anytime if you buy any share or invest, that ratio is the most common ratio used, and you have done that ratio. Ratio number is 7, but you have never respected the way respect it should get. It's a price earning ratio. Price earning ratio. With love we call it as P ratio. It's a price earning ratio. P ratio. Can you tell me the formula? What price? It's okay. Now look at the formula itself. How the name is written. If I say Mohit Jain, what is the name? What is the surname? If I say price earning ratio, like, do not look at me. Mohit Jain, it's okay. You said Mohit first name, then second name. I'm saying price earning ratio. What is first coming? Second is coming what? It has to be price by earning, price by EPS. It has to be apple to apple comparison. Price is 1 share, EPS is respect to 1 share. Price is with 1 share respect to 1 share. If it is a total, if it's a 1. Second formula also we know, which I might not discuss with you, or maybe if time permits, I'll discuss with you today itself, because I have to explain one more term. Now, before I again show you the beauty of this price by EPS, I'll come back to that screen. Don't worry if online someone has not copied. Let me go back. MRF, let's not look at MRF. Let me see one thing. MRF is one. Any comparable company to MRF? Which tire? JK tire. It's good. You can have JK tire. Let's suppose JK. JK tire. Very good. But let me not compare because the face value is not same. It's 2 rupees. Although it does not make a difference, but let me still not compare. For this ratio, it does not matter. Maybe. Let me see because I want to show you something else. Yes. See it. What happened? See it. See it is also tire. Now, what am I like? See it is also tire. Let's come back here. What is the face value? 10. What was the face value of MRF? 10. What was the share price of MRF? 1 lakh. What is the share price of C8? 2000? 2400 approximately we can take. Which company looks cheaper? Let's suppose if I have to ask you a question. My client want to invest in the tire sector, let's suppose. They want to invest in tire sector. Which company is cheaper? One company I want to buy I want to invest in tire sector because lot of expansion will happen. I'm assuming lot of things would change in this industry. One share I'm getting at 1 lakh rupees. Second company I'm getting at what? 400 rupees. You advise me what should I do? The opinion has to be there. Don't worry about the opinion. It will be 90% wrong. You've not seen Sultan movie? You seen movies? You have to watch movies. I don't know why. And relevant part of the movies. I'm a avid watcher of a movie at least after the COVID. The movies which I have not seen in the years, 20 years back, I watched everything, and same movie I can watch 10 times also. But I want those particular scenes. For example, Sultan movie. Salman Khan comes in and he goes for a fight. He does not know anything. Now, English is, I'm telling you, it's very difficult to explain in English. You feel bhavna, feeling, understand the feeling, bhavna. He goes for a akhada and says, register my name. And now how to explain that scene? First time, who's the actress in that movie? Anushka Sharma. She refuses because you are useless fellow. Actual nalaik. That's actual nalaik, she says. And next day he feels hurt. He goes to his father's house and then says, I want to fight. Father says, you have not learned anything. He has not learned by that time. And he fights. And he loses badly. You've seen that movie? Remember that scene which you've not seen Sultan movie? If you've not seen, then I tell you what happens. He goes, he have not learned anything. The way you've not learned the subject till now. And he fights, he loses. The same way I ask you something, you give a wrong answer. Exactly he loses. And then the Anushka Sharma's father says that you will lose badly, you do not even know how to fight and you'll get hurt, etc. He says, no, I'll try. And then he gets up from there. And then his father says, I told you are not prepared. And the dialogue he comes out as English, and let me convert the dialogue. To get something, you have to lose something. How to speak that dialogue? Means you have to self-realize we do not know anything. Feeling you're getting, bhavna you're getting, you have to self-realize you do not know anything and then only you start learning. Means someone has to tell you you do not know anything. You've seen Meri Shaadi Mein Zarur Aana? I watched it 2 times in the last 4-5 days, I think. Some particular thing. Again, everywhere you find in movie, actress will be the reason for the actor to perform well. And I don't know why it happens. Practical life does not happen. Practical life does not happen. The girl refuses because the boy is a clerk, girl is a slightly higher officer, and he gets pissed off, and then he does the studies of IAS and he becomes an IAS officer. And then he is taking a revenge from that girl. A beautiful movie. Actress is Telugu actress only. It's a Hindi movie. And the girl, when she says, why are you troubling me so much? He says, you have given me so much of pain over the period. But she says, you realize you become you because I dissed you. That's why you become. Exactly same thing what I want to tell you is, if you make a mistake here, I'll say you something, it will hurt. When it pinches here, you'll automatically tomorrow will try to learn something. How can I miss out? Feeling you got what the feeling was. It was not the movie, was not the feeling I was telling. That if I have to buy one share, which share I have to buy? Any share you tell me. And 99% you will be wrong, I'm saying. It's better to be wrong here. Because when you feel that when it hurts, then only something comes out. The fire in the belly, you no leave apart what I say. One share is coming at 2400 rupees, second is coming at 1 lakh rupees. Prima facie, it has to be seen no matter how many people you ask. How many people you ask. Now let me come back to topic again. We are in the one of the costliest area of Hyderabad, Panjaguta, let's suppose, Somajiguda. It's nearby. It's one of the costliest area. I'm buying a property 1000 square feet. I'm buying a property 1000 square feet in Panjaguta. Exact same height, size, width property I'm buying in Shamshabad. That's outer. And those are from outside city. For them, one property I'm buying in Nariman Point and one property I'm buying in a village, for example. Same height, size, width I'm saying. Which property do you think would be costlier? You will not even take a time. If I say Mumbai, Nariman Point I'm buying in a village, or I'm buying in a Panjaguta would be costlier than the Shamshabad. Mumbai would be costlier than the village. You have not taken even 10 seconds of a time. But in the share, you took so much of time unless and until I have to tell you two stories of a movie, which I could not explain because they were Hindi movies. English was difficult to convert. That means, think of logically, if you can so easily give the answer for the property, it's also an asset class. Share is nothing but an asset class only. Then how can I say 1 lakh is costlier than this? Or basically, if I ask you property, for example, tell me the property. Why do you think Panjaguta or the Nariman property would be costlier than any of the remote areas property? You can have the word facilities, or you can have basically, you can say the location, area, the kind of locality, people, or if we buy a property near the Mukesh Ambani house, the cost comes out, etc. But these are something which you have framed as a general language. It's basically rental income would be very, very high in those areas. The rent decides the valuation of a property. Any kind of, I'm telling a basic framework of any kind of a learning of the asset is what kind of an income I generate if I buy that asset. Leave apart few classes, gold and silver, they have their own properties. When I buy a bond, debentures, when I buy a share, when I buy a property, automatically for investment purpose, you will definitely look at what kind of a rental income I generate, and accordingly valuation becomes. Now think of a concept here. If I'm buying a share of 2400 rupees, how much EPS this company is giving me? EPS 50. That means do not work out any ratio. 50 rupees I'm getting when I buy a property of share worth rupees what? 2400. If I go to the MRF now, although MRF could be costly on the relative terms, but prima facie you cannot say that. How much earning I am getting here? 2000 approximately. That means 2000 I earn, I pay 1 lakh rupees. If I earn 50, I was paying how much? 2400. That means the 2400 and 1 lakh rupees are non-comparable, please. The income behind them will tell you the valuation which comes out. That is basically, can you see here P ratio? They have calculated. This is exactly what we'll be doing. Price earning ratio. A very, very important parameter. The very, very important parameter. I'll take this example and don't worry. This is the P ratio. This is which company? MRF. P ratio of MRF is 53. Let me go back. We see it. P ratio of this company is 47. Although this will be cheaper, comparatively also will do that. But understand the objective behind it, please. In life, from now onwards, if anyone says by looking at absolute prices, if thing is costly or not, you cannot say. It has to be relative valuation. That means proportionate. You see that this much I am paying, this much I am earning, this much I am paying, this much I am earning. What you do in the property market, exactly same thing will be doing in this. So that becomes my ratio. Now, if I have to speak in numbers, I'll be able to speak in numbers. P ratio, prima facie, everyone would say it's price by EPS. We agreed, price by EPS. But when you stand with someone and say that how do you read that number, you have to be able to read that number. For example, let's try to read that number. What was the, we'll round off the numbers here. This will take see it as, for example, 2400 rupees. And EPS, let's take 50 rupees. Assume 50. So if I pay 2400 rupees today and earn 50 rupees, assuming every year I'll earn 50 rupees, ceteris paribus, no change in this. So 2400 divided by 50, how much it comes roughly? Approximately 48. Rounding off is coming because it is coming 47.63 because it's exact calculation. 48 you're getting. Now let us try to speak 48 number. How would I speak? 48 number I'll speak is, if I invest 2400 rupees today and earn 50 rupees every year, my recovery of the investment will take place in how many years? 48 years. It's like a payback period of your capital budgeting. This is one language of explaining. Similarly, go back to the MRF. 1 lakh rupees invest, you earn 2000 rupees every year. Your recovery will take place in how many years? 1 lakh divided 50 years. So in this case, my recovery is happening in 48 years. In that, recovery is happening in 50 years. You tell me prima facie which is better off? 48. Although this is coming better off, but you have not compared 2400 and 1 lakh. You've certainly not. If that was the comparison, then Idea share would have been the best price. Idea is 7 rupees. The Reliance is, excluding Jio now, is 2600, and Bharti Airtel is 900 rupees. Idea is the best, but it does not move at all. Nalayak share. The 48 looks better off. Second way of reading, 2400 rupees investment. How much you earn in the C8? 50. 48 comes out. To earn 50, I need to invest how much rupees? To earn, this language I'll dictate, don't worry. To earn 50, I need to invest how much? 400. To earn 1 rupee, I need to invest how much? Means to earn 50 rupees, I'm investing 2400 rupees. To earn 1 rupee, I need to invest how much? I think it's a time for break. How much? 48. 48 is meaning that. That means to earn 50, I'm investing 2400. To earn 1, I'll have to invest what? 48. Similarly, MRF, second language also I can read. So in both language, I can say 1 rupee I have to earn. 1 share is asking me to invest how much? 48. Second is 50. Which one is cheaper option? It's exactly same thing I'm saying. 1 lakh rupees rent. 1 lakh rupees rent. Two places. One property for 20 lakh. One property for 30 lakh. Which is better off? 1 lakh rupee rent. One property is coming in 20 lakh. One property is coming in 30 lakh. Which one is better off? 20 lakh. I'm saying property wise you're so good because you've been hearing this term for a lot. And you've been seeing this. Exactly same valuation parameters will be applying here. And you should be able to read numbers. This is one of my asset class, and please do not speak so much of the market what I speak in the class at the home, because your parents might tell you what kind of a class you go. But Hyderabad has a problem, South has a problem, I don't know. They do not love the equity. Now at least they've started loving equities. Otherwise they think equities is gambling. It is not. And I'm telling you, the way we are moving, if the next 5-7 years we grow the way we are thinking, we're moving from almost towards a 5 trillion economy. If we move towards that, I'll show you the best asset class has to be the equity market, the kind of return. For example, I showed you the decline also comes so much. For example, I showed you this share Ukal Fuel. How many of you can earn 15% return in a single day? This is the only asset class. And I would not be surprised if any positive development happens. Please do not buy it. It's own educational purpose I'm discussing. If any positive development happens, you might see this price at 300 rupees also in 1 year. The money will not double. Interest rate of the FD is 8% on the higher side. Senior citizen can get maybe 9%, let's suppose. 100% divided by 9 is 100 divided by 9. It will take approximately 9-10 years time. So equity market, if economy grows, I'm saying, provided this EPS what you have, it has to grow. P ratio of this company is very high as of now. If this economy grows and the company grows, then the best asset class is equity market. Yes, you should not be fascinated by low ticket size price. The penny stocks 5 rupees, 4 rupees, 3 rupees, they will become zero for the period. Otherwise, no one would be buying 1 lakh rupees of MRF, no one will be buying the C8 companies and so on. So equities is something why I told you, because some of your parents might see that equity market is a very bad. It's not that bad. It's only what I earn. Let's suppose I earn 100 rupees, maybe 10 rupees I'm investing. I'm investing only that much which helps me able to sleep. If you leverage out, if you borrow and invest, that's something which happens. So spend money on yourself. Anyhow, stipend you get 5,000, how much you'll spend and how much you learn and how much you'll invest. Why are we talking this? We'll come back. It's only for learning purpose. Let's come back. So whatever money you earn, first enjoy the life, and then if anything is left, by chance left, which will be a rarest of the circumstance, then you can only buy Idea share of a 7 rupees or 8 rupees. That is only you can buy, which avoid. Price earning ratio. Let's write down the numbers. You remember MRF and C8 both. Let's write down that numbers. We'll calculate the ratio. We will dictate how to speak that language. Two companies we compared, MRF and C8. Sir, you have, why can we compare, sir, MRF and let's suppose Reliance? I might not be. MRF and Vedanta might not be, because they're from different sectors. Every sector has its own benchmark. That means if P ratio of the C8 and the MRF is around 50-48, we can compare. That means industries towards this range. So every sector will have, for example, if you're buying a property in Panjaguta, you'll find the prices of Panjaguta. If you're buying property in Shamshabad area, you will find that. If you're buying property in the Connaught Place, Delhi, you will find the areas nearby. So it's a peer group what we are seeing. Yes. We have. Tell me the Share price, rounding off will do. 1 lakh. See it? 2000. Rounding off I am doing, please. EPS. Sir, it was last 12 months. We are assuming that they were same. Then why someone would buy MRF and not see it? That also I'll tell you. First, let's finish off this ratio, please. How much do we have? 2000. Let's take round off. I'm just taking a round off, please, because some of you are not carrying calculators today. Was 50. Just calculate for me P ratio. This was 20. No, 50. It will be written as 50 times. The way of writing is times. This ratio used to be there in your intro also, but we never respected it. This is the first common ratio which any investor sees when he is investing directly in the equity markets. Now, how to read 50? The way of reading 50 is 50 means, once more I'll verbally speak and then I'll write. 50 means what? If company earns 2000 rupees and I invest 1 lakh, my recovery of investment will be done in how many years? 50 years. This is similar to which concept of capital budgeting? Payback period. Let's put down. If company earns rupees 2000, then recovery of investment of rupees 1 lakh will take place in how many years? 50 years. This concept is similar to payback period concept of capital budgeting. This concept is similar to payback period concept of capital budgeting. Second interpretation. To earn 2000 rupees, you need to invest what? 1 lakh. To earn 2000, you need to invest 1 lakh. To earn 1 rupee per rupee of earning, you need to invest 50. To earn 2000, we need to invest rupees 1 lakh, comma, it means to earn rupee 1, we need to earn rupees 2000, we need to invest rupees 1 lakh. It means to earn rupee 1, we need to invest rupees 50. Now, prima facie, on the face of it, which looks cheaper to you? Early recovery or late recovery? Early recovery. Which company is better off? See it. Lower P ratio company is better off. Now, if that was the concept, sir, we told you 2400 rupees is better off, but the way of looking was different. It is not so. I'm saying it again. It was by chance this is coming the same way. Lower P ratio better is company is better, assuming all other factors between the two companies are same. Now, in practical life, it can never happen the two companies are same. It could be difference of the management. It could be difference of the product or quality. It could be the perception, the growth perception could be there. In fact, this is the basic ratio. We'll have something called PEG ratios, price earning growth ratios. Maybe the growth of the MRF is higher than the growth of the C8 going forward. So that's why the people are giving higher valuation for the MRF when we say it. But if in interview this comes in, they'll ask you in exam. I think maybe objective type they can ask you now which company is better off. lower P ratio or a higher P ratio. You should be start building that mindset also now. Maybe previous batches I might not have emphasized on these small 111 language terms, but this batch I'm sure the language what I dictate could be framed as a question, because this is one of the favorite interview questions. Two P ratio company, which P ratio company is better off? It's a lower P ratio company better off. Assuming everything is same between two companies. Then second question can come, if lower P ratio company is better off, then why would someone buy a high P ratio company? Then the answer comes as, in practical life, no two companies can be exactly comparable. There has to be some difference between the companies which comes out. Let's put down that thing. And then we'll take a break. I think you're feeling cold. So if you feel cold, tell him only, he'll switch off the fans. The moment you learn that switch, you do it, I'll become stagnant. You know, alright. It happens. You want to see that, you can see the moment you'll switch that, I'll stay still, but everything else will move. They have interconnected cameras, wires in such a way that they can only understand what is happening. They switch something else and it switches on something else. What was I saying? What was I saying? P ratio company. Let's put down please. It's a very important interview question which comes. Lower P ratio is better. Lower P ratio is better, assuming all other factors. Assuming all other factors are same between both the companies. Are same between both the companies. One more term I think I can discuss with you and then take a energy nap. P ratio, I hope you are able to read. Now when you are talking to someone, now why I told you read again, I'm saying form that habit please. If you tell someone a formula cannot have the impression. But if someone says this company is coming at, because this is very common ratio, if any of your parents or any in the family member is investing, maybe do not start investing, because it takes some time to understand the companies and direct investment, plus you will be deviated from your studies. Learning is one part, investment is one, because when you invest money, you will not be able to sleep, I am saying. If you earn, you will not be able to sleep. Why I am getting 6:30 in the AM in the morning, I am earning in the market itself. Why should I earn? Go. If you lose, then you will keep investing more to recover your earlier loss, which will make you more loss. I tell you very basic fundamental principle. I have been investing in this market for very good number of years. I love it. It's first love is teaching, maybe second love is that. If I was earning a X number of crores of rupees, let's suppose, then who requires to get up early morning 6:30 AM class? Maybe it's my passion, that's separate thing. But I'm saying, what I'm saying is, do not do a gambling. Means do not, if even if you want to invest, let's suppose you earn, you can have a systematic investment plan of mutual fund, which is a part of your course subject, which comes 500 rupees every month is going. 500 rupees out of 5,000 is manageable, because that you can manage. You cut out some other expenses. What expenses you cut out, I don't know. That invest so that you get habitual of investment. Investment is a habit actually. The way you buy gold, the way you buy property, these are big. In this I can do small investment. If I cannot buy MRF share, I'll tell you the way of buying the MRF share or become a shareholder of the MRF. We can become the shareholder of the MRF with a 500 or 1000 rupees also, which I'll tell you in the subsequent classes. So this is one of them. One term more will do, and then we'll take energy nap break. Right on the next term, please. Market, what term we have now? 7 ratios we have done. 8th ratio. Market capitalization. Market capitalization or market cap. In your junior classes, you used to call it as market value of equity. You used to call it as market value of equity. Tell me the formula if you can. How do you calculate market value? If you calculate, it will be share price into number of shares. Shares. Share price into share outstanding. In the practical life, we get this value updated every day from the website. I'll show you that. It's a share price into means basically market value of the equity. It's not the book value. Market value, share price into number of equity shares. If I try to look at, let's suppose, look at this part here. Now, can you see the market M cap here? Third point, M cap full. How much is 356 crores? What, sir? What is FF? We'll learn in the subsequent chapter. Free float. That's not as of now relevant for me. It's 103.38. What I basically tell you is, for example, let me do one more thing. Some exercise I can do since we have a time in hand. Promoter is holding how many shares? This is total 100%. Promoter is holding how much? 70.28. Public is holding what? 72. You know how this full market cap was calculated? 356.47. Whatever number of shares this company had into what? Share price. Now, how much public was holding? Multiply roughly with 29%. 356.47. How much do we get? 356.47 into 29. How much do we get? 103 something you're getting. You understand what is free float now? If I do not have to tell you, this will be part of one of my chapters. So when I come, it's a M&A will have free float market cap. So that means by the divide, sir, if company has to be bought and sold, it will be entire this. And by looking at these two numbers, you can make one view. If promoter holding is good, two shares I tell you, in one promoter is holding very high number of shares, in second promoter is not holding number of shares. What do you think? If prima facie nothing else I have told you, which should be better off? In which promoter is holding more number of shares is a more stable company, or in which promoter is not holding? Promoter holding. So this tells you something of that sort, for example. So maybe it will move or not, etc. I do not know. For example, if we go back to our own companies, let's suppose we had the C8, for example. Look at the C8 market cap. Total market cap is 9824, approximately 9800. Now you do one thing, free float divided by, do 5108 divided by 9824. That means public is holding approximately what? Public is holding how much approximately? You are able to get that sense out. This is free float and this. For example, if someone has to buy the company, he'll be buying promoter and public share. If promoter want to delist the company, then he has to buy how much amount is required. So these have some significance. Maybe by chance this ratio came and I showed you, otherwise it was not relevant. But higher market cap or the larger promoter holding is a safety margin. That means I will not be fooled around. Otherwise we have a companies which are penny stock in which promoter is not holding and price is moving. So be aware of that share. I'm not saying that will not move, but be aware of that share that could give you a dent also sometimes. Investment anyhow you do not have to do. Again I repeat, more than 10 times I'll repeat in today's class at least, any share which I discuss with you, any kind of financial knowledge which I discuss with you is only for the purpose of educational and my formulas which comes out. Is that fine? This was the market cap. Let's take a energy nap here. So around 12 minutes break we'll take and we'll start off. Let's start. Let's come back, please. Now, next term is also a very important term. Although I think full introduction will not finish off today, so we'll continue in some in the next part also, because otherwise it will be an overdose for you. But what I have to show you the results. Anyhow, we have tomorrow and Monday also, because before the markets open, because if market open, you will not be able to analyze what I want to show you actually. So today what I'll do is we'll cover one more critical term and then some part before the next chapter, because tomorrow we'll keep class tomorrow. I hope there is no issue, because momentum will go otherwise. Maybe come for a small time. Sundays, every Sunday we'll take a call from next Sunday. At least 3-4 days I want you should get comfortable. So we'll keep the class tomorrow also. Maybe same time only, I'll not change time. So 10 o'clock we'll wake up, because that will become a kind of an indiscipline. I feel so, although it's good for me, because Sundays we have a, I'm part of a senior citizen group. So they go out for a breakfast. Can we close this door? Then they go out for a breakfast. I have to go with them. But anyhow, one Sunday at least I want that we should be coming out. After that, you will have such a workload that you will have appropriate time to manage it out. And flow will be built up. The 3, 4, 5 classes will build up the flow. It's okay. If by chance it rains, then what? That is the challenge which comes out. And if you can come out of that challenge, Sultan movie, then the love for the subject has built up. Otherwise, my motivation will go down, because although do not get wet, for example, and 99% I'm saying class will not get off unless and until any emergency happens. Now I have said today, I hope nothing happens, means it will not. So anything which has to happen, it will be a pre-planned, which is not in the plan as of now. So will be go accordingly very smoothly. My only objective is what you study, that digest please. In case you are not able to absorb or digest, maybe I have used lot many terms today. Could be a possibility we have used lot many terms today. Maybe for you some could have been faster. But give me, I'm saying 3-4 days time. By third or fourth day, you would be comfortable what I'm showing, because you saw the BSc website for the first time. If I today, my objective was to show you today itself that the how do you read Nifty, how do you read Sensex. But I think that will take to the next session, because else my objective will go. And I'll keep giving you some work, because I'm assuming you will be able to easily finish off before the November. We should be able to be around 80 classes, and plus around Sundays we add or some holidays we add. We should be able to finish off in a nicer framework. During that time, what I'll do is I'll give you some work in which you can work on respective companies or respective things which can enhance your knowledge about the subject. And you keep in target that within this year you have to finish off group 1. Means that target you keep it. How do you keep it? I don't know, because if you're giving in May 24 exam, then I want you to have the target. My subject will appropriately finish it off. With revision I'll make sure, and with the tests etc. provided you to give it, and we are comfortable on that. But terminology should be very clear. Reading habit should be clear. I cannot assume the first day you will start reading the way I am talking to you. This face value, that face value, maybe a lot of terms would have been new for you. Maybe some of you would have felt in the class itself the formulas we are seeing for the first time. And if you start getting that feeling, my purpose is done. The purpose is done because that feeling itself tells me that we are learning something new. Otherwise, we are not learning something new. For example, price earning ratio you would have done. If you do the same way, then my objective is gone. If dividend payout ratio, I am saying anyone ask, he will tell you payout ratio. But if I am not able to understand the objective, because when the questions become part of the case studies or when it becomes a part of the lengthy question, I would not be able to interpret the question. That will give me a challenge. For that reason, we have to be very comfortable. The next term what I am using, you have heard this term, but you have not seen the beauty of this term, beta. Expression shows we have hearing this term for beta. RF plus beta into RM minus RF, that beta, you know, beta, that beta. This is one of the most important term of our subject. Most important term. Formulas, etc. will come when we move to a chapter called portfolio management. But by that time, I want before we reach that time or till we reach that time, You should be adaptable to this term in such a way, even if you get up and says beta, you should be able to speak the way I am speaking today. And you would be able to speak. What does it represent, etc. So, ninth ratio, we are putting a very, very, very important term. Beta. Sorry. Now, before I move forward, let me tell you, I think beta actually shows a relationship between, do not write anything, beta shows a relationship between return from a particular stock and return from the stock market. What is a stock market? I'm saying maybe today we'll not have the time to discuss that. Next session I'll do. Give me 2 days time. You'll be so comfortable in reading the numbers, market, Nifty of a 20,000, Sensex of a 66,000. You'll be able to read everything. But else my subject will go for a toss. Beta shows relationship between the return from a stock market and a stock. Stock is a particular share. For example, Reliance, Infosys, TCS, Wipro, Ukal Fuel, for example. These are the names of the stocks which. What is the relationship? Now, how do I find that relationship? I'm just taking a rough number. Let's suppose I'm a stock market. I take 10 steps. I move by 10 steps. And she moves by 12 steps. I move by 10. She moves by 12 steps. I move by 20 steps. She'll move by how many steps? I am moving 10 steps. She's moving 12. I move 20 steps. She will move how much? 24. What is relationship we have? If I take 1 step, she'll take how many steps? 1.2. 1.2. I take 10 steps and she is moving 8 steps. I move 10, she'll move how many? 10, 8, 20, 16. My relationship is 0.8. Understand the meaning of it, please. That shows a relationship between if I earn 10 percentage, she will be earning 12, 1.2. If I fall by 10 percentage, she will fall by 12 percentage. Understand, it's a relationship between the stock market and a particular stock. How do we calculate? I've used a very common term, relationship. In statistics, this kind of relationship you find using what number, you know? You've heard something called correlation? Correlation. We'll be using some formulas. I'm not dictating any formula today, neither I'm working on that, please. I'm just making a framework. The way I'm thinking, my mind should work. I would be able to create my formulas. That means I'm saying my relationship is captured by this beta term, and when we see relationship is captured, we'll see a relationship between them. How do I know, sir? She'll move 12. How did we get 1.2? That is not my objective. But I want, after today's class, if someone says the relationship is 1.2, we'll say if I move by 1%, she'll move by what? 1.2. You find this kind of a language you've heard somewhere in the inter class, not beta chapter, any chapter which could have been a first chapter of your inter. Have you done something called leverage chapter? Do you remember? Operating leverage, financial leverage. Do you remember any kind of a language used to use that kind of leverage? That's basically kind of relationship language. What will we finding? How do we find that? I'll leave a second part. Now, once I'll dictate this point, then I'll come back. You should be knowing if I say 0.8, it means a market if changes by 0.8 percentage, this particular stock will change by what? 1 percentage. It means if she is 1.2, relationship is 1, 1.2, 0.8 is 1, 0.8, and I've said the relationship. I did not tell you gain or loss. We are not talking gain or loss. And please understand, in financial management, when we speak the risk, when we say there is a risk involved, risk is a fluctuation. Risk is a fluctuation. Fluctuation is the risk. For example, do not feel hurt. I am saying it again. I might use some examples on your name also. For example, let's suppose Ram and Sham, two brothers, went to give the exam. They came back and you asked Ram how many marks he'll score in the exam. He said 60. Sham also said 60. And to Ram you asked what is the upside and downside fluctuation. He said plus minus 15. That means upside is how much? 75. Downside 45. Downside 45. Just give me a second, please. Just give me a second. 45. Now, just 1 second. Now, similar way, Sham was asked a plus minus. He said 25. Upside how much? Who's better off? Sham. Lower side? May after November, November after May. You understand? When you say higher, you understand the fluctuation meaning, please. Risk is what? Return could be higher. When you invest in any risky project, return is higher, loss could be higher. So risk is a fluctuation. Higher the fluctuation, higher could be the risk. So basically, these are some of the factors. Beta also, for example, when I said 1 point, for example, her step were 1.2. If I jump by 10, she'll jump by 12. But if I fall by 10, she will fall by what? 12. So there is a risk involved. Her movement was lesser. What kind of a companies do we see? What are these? You will be finding beta is basically a relationship between a return of a market and a stock market. We can have higher beta, we can have a lower beta, and these all I'll dictate as a secondary point. First point, let us make out what we have spoken till now. Let's put down please. It shows relationship between shows relationship between return from stock market and a particular stock. It shows a relationship between return from a stock market and a particular stock. Interpretation. How do we read? My objective is you should be able to read out the numbers. Now before you copy, just see how I make exactly and then you copy please. After that, do not copy. Give me a 30 seconds time. Give me a 30 seconds time please. Just do not copy. Beta or interpretation you've written now. I'll do it here. Please do not copy. I'll do it this way. Beta interpretation. For example, let's suppose I'll write here 1.2. Interpretation would become what? I'll write interpretation from here. What will it become? If the stock market increase decrease by 10 percentage, then this particular stock will increase decrease by what? 12 percentage. If stock market increase decrease by 10 percentage, then this particular stock will increase decrease by 12 percentage. Let's put down please. So basically interpretation would be a larger side. Beta you can have on the left. Beta will be only this much only. So interpretation beta. I'm putting it here please. If the stock market increase oblique decrease by 10 percentage, then this particular stock, if the stock market increase oblique decrease by 10%, then this particular stock will increase. In exam you do not put this arrow for increase sign. Increase oblique decrease by how much percentage you said? 12 percentage. And in bracket I'll write 10 percentage into 1.2. 1.2. Understand the flow please. Market increase, decrease, stock. This is 10, this is 12. That was beta. Now, for beta of, let's suppose, 0.70, you interpret. If the stock market increase oblique decrease by what? 10 percentage, then this particular stock will increase oblique decrease by how much percentage? 7%. If you are able to read this much, my more than half the battle is won. How to calculate the formulas of the beta, that we'll see when we move to the chapter. Then we'll see when we move to the respective chapter that what kind of a formulas of statistics we apply on them. So it's basically beta of 0.7 which comes out. Now look at one part here. Are they moving both in the same direction? If the stock market increases, this particular stock will increase. Beta captures a relationship over a long period of a time. It captures a relationship over a long period of a time. We are not seeing every day. Every day you'll find market moving up, stock is going down. For example, yesterday market went down, but the stock went up. It is not a short-term relationship. It's a longer-term relationship which comes out. Positive beta. We have a positive beta which shows same direction movement. That means if the market is moving up, the stock will move up. If the market is going down, the stock will move down. We call it as a positive beta movement. Sir, can we have a negative beta? Theoretically, yes. I'm saying it again, theoretically, exam purpose, yes. But if by chance any interview you go and says negative beta, you'll say no. Please understand, I'm saying very frankly, there is no concept of negative beta in the longer run. Please understand why. Let's suppose I open up a shop in a mall. We have 100 shops. And that entire mall or market is booming. Everyone is doing good. My shop is not doing good. For example, let's take an example of the airline sector. Aviation sector as of now is doing good. Vistara is doing good. The Indigo is doing good and so on. One of the company filed bankruptcy. You know which one? Go Air. First, that Go Air. Go first. We have not seen the flight now, and you are asking us the status of the flight. And you would not have seen lot many things, but still you should know the things. Leave apart this. What I mean to say is, if the entire industry is doing good, but I am not doing good, do you think how many years I'll keep my shop open? Maybe 6 months, maybe 1 year, maybe 1.5 years. After that, I'll do what? Close out. Let's suppose everyone is doing bad, only I am doing good. It is practically impossible. What I mean to tell you is that if the overall market is doing good and my company is not doing good, I will not stay back in that company. I'll wind up. If market is not doing good and I am doing good continuously, that is also not practically possible for a longer period of a time. So negative beta, that means opposite direction. That someone is going up and I am going down, and someone is going down and I am going up. That's not possible. Theoretically, yes, it's possible. So practically, we have a positive beta. We call it as a same direction movement. Higher beta basically shows higher fluctuation. The upside also, downside also. The lower beta shows lower fluctuation. Negative beta, let's suppose I tell you minus 1.1 for example, negative beta. How to read that beta you should know. In exam it can come, it can come. Can we calculate the numbers? We'll calculate the numbers also. The negative beta would mean is, if the market increases by 10, I will fall by 11. 1.1 I'll read same way. Change of how much percentage? With every 10 I'll have a 11% change. But it will be in which direction? Opposite direction which comes out. So this what we did was, I'll write it here. This what we done. I cannot tell you a history behind it. I used to work in a iBanking, and my manager gave me some work from the France. He was the MD level in the iBanking, and he took my entire 1 week, gave me n number of data. 2008-9 crisis, I remember. That time, just new chartered accountant you become, you go theoretically no. That time we did not use to have this concept also. These many concepts. You have done theoretically beta etc. And he gave me such data. He was, I think, researching on some data to prove in the industry a negative beta, and he took my 1 week. and it did not come at the end. I thought today my job is gone. I'll be thrown out. And then evening when he calls, he says, Mohit, I was trying to do some work if I can create negative beta. If it's not coming, it's okay. Now, like for you, 15 hours a day, 7 days a week I have spent. You could have told me earlier. After that, it has stuck somewhere here. That practically, it's very difficult. It's not you cannot create. Data you manipulate, you can create. But negative beta is rare. Think logically that everyone is doing good and I am not doing good. How long I'll stay back? Because why theoretically I am saying for you data will be for what? 2 data points will give you, 3 data points will give you. But when we have a longer relationship, for example, we say equity market is doing good, Reliance is not doing good, Infosys is not doing good, TCS is not doing good. How long it will happen? It cannot happen. Individual companies do differentiate between that some market is doing good, I am not doing good. But it cannot be a longer term relationship. Beta captures a long term relationship. How do we calculate that? I am leaving apart because for that we have to learn a lot of formulas. So this I call it as, I'm just writing it here. This is positive beta. If you have this space, it's okay. Otherwise, in between somewhere you can write. If you have space, fine. It is positive beta. And this positive beta basically tells you is same direction. Moment. Same direction. Moment. And below that I'll capture negative beta also. Let's suppose beta of minus 1.1. The way of reading would be if the stock market decrease by 10 percentage, then this particular stock will decrease oblique increase by 11 percentage. Please understand, the multiplication is done same way. Its only directional movement is what? Directional movement is opposite, reverse. We call it as a negative beta, theoretically possible. I'm saying it again. It's a negative beta, theoretically possible. Opposite. Direction. Opposite direction movement. Negative beta, opposite direction movement. Now, few notes before I dictate again. Beta is capturing a relationship between what and what? Market and the particular stock. Stock market I have not explained. Maybe today I think we might not explain it because I want you to digest what we have done after this part. But by within 2 classes you will be very comfortable. I can bet you on that. You will be able to read any kind of a number from there. One important point I discussed with you is negative beta, beta that captures relationship between stock market and the market. What do you think is the relationship of a market with itself? For example, my relationship with you was 1.2 or my relationship with her was 1.8. What do you think my relationship with me would be what? 1. That means beta of the stock market is 1. My relationship with myself is 1. Second important point. If the beta of the stock is greater than 1, we call it as a high beta stock or a aggressive beta stock. Why sir high beta, aggressive beta? That means let's suppose someone has a beta of 1.5. Movement would be how much? With respect to 1.5. If the market increases, that stock will increase by aggressive. If the market falls, that will fall by aggression. We call aggressive or high beta stock. What are the type of industries we have in that? These type of industries are which do very good in the booming time, or high beta stocks are banking stocks, for example. Banking stocks you can have, cement stock, steel sector you can have. Steel is one of the high beta stocks you have. And the another is banking infrastructure stocks, for example. These stocks will be the moment economy, for example, if the economies are booming, the prices will move very quickly up. But if slight of a slowdown comes, they will fall drastically. These are called high beta stocks, aggressive beta stocks. If the beta of the stock is particular stock is less than 1, it is called low beta stock or a defensive beta stock. Defensive beta stock could be, for example, although practically you might not be able to see with all the companies, but in general, if I say a pharma type of a company, hospitals, for example. Now, for example, I do not fall sick by looking at the size of the economy, that oh, economy is booming, let us fall sick, we'll do good, or economy is not doing good, you will not fall sick. It does not happen, because the rate will remain same. Yes, they start earning or price starts moving because they might increase their rates. For example, COVID time when happened, it was exceptional year. It was exceptional when this industry was booming, everyone was not doing good. So that's exceptional, but otherwise they know average out what is happening in that. Colgate, for example, Colgate is a listed company. You do the brush. It is not that economy is doing good, I'll do 5 times brush a day. Or if economy is not doing good, I'll stop doing. It does not happen. So these are low beta stocks. What is the importance practically of them? A portfolio manager, mutual fund chapter will do, a portfolio manager who manages the portfolios. You start, there is something called a mutual fund. You know mutual fund? We have in part of course, I'm just discussing roughly. In that you give the money and your money is invested in the mutual fund. Now, economy is doing good, bad, etc. But your money is going, that mutual fund has to invest the money. Now, how does he make a call? What to invest, where to invest? If he sees market is booming and going very up, what type of a sector he'll choose? High beta stock or low beta stock? High beta, because if the market is moving, his stock should move higher. In case he feels slowdown can come, but still, since he has the money, he has to invest. Then what type of a stocks he'll choose? Defensive beta stocks. So this is how the reason of the high and the low beta stocks comes in. And beta shows a relationship. Beta is a measure of a systematic risk. So what is a systematic risk? It shows the overall risk, systematic. We have two type of risk. One is called systematic, second is called unsystematic. Unsystematic, you know what is unsystematic? Any rough idea? Unsystematic could be a company specific risk. For example, a particular company has a risk. Systematic is which represents the which everyone would be getting impacted. Means you cannot safeguard yourself. A fluctuation in the interest rate, a change in the interest rate, it can be increase, decrease, anything. Everyone gets impacted. Inflation, for example, everyone gets impacted. It's not any one of them gets impacted. Everyone gets impacted on that. We call that as a measure of a systematic risk. Is that fine? Let's put down, please. Let's quickly put down few notes here. Systematic risk is a macro level risk basically. If let's suppose we do not have a systematic stable government, it's a risk of a system. It's a risk of a system. Inflation will impact everyone. Foreign exchange movement will impact everyone. Macroeconomic. Unsystematic would be a company level risk. We'll discuss at appropriate stage that will come out. So first note which I dictated was beta of the stock market is what? Or beta of the market is what? 1. Beta of the market is 1. If the beta of the stock is greater than 1, it is known as high beta stock or aggressive beta stock. I am not writing the name of a particular company. I'll write the sector which are high beta stocks. The examples could be from banking companies. It could be airline, for example, infra, metals. These are high beta. With good news, they'll jump up very quickly. With bad news, they'll fall down very badly. Metals is, in fact, especially one of them. If a slight news comes, China is slowing down, metals will take a hit. Vedanta, for example, Hindalco, for example, they'll fall. If China is doing good, because China is one of the major consumers of, because if infrastructure activities are good, the steel, cement sector, everything would be consumed. The infra would be booming. So they'll start jumping in the anticipation that the numbers in the coming season would be very good. These are some of the high beta stocks. If the beta of the stock is greater than 1/3. if the beta of the stock is less than 1, it is known as low beta stock or defensive beta stock. Example could be FMCG, fast moving consumer goods, pharma sector, fast moving consumer goods, HUL for example, ITC for example, Colgate, FMCG. On a particular day they can move up down by quite some percentage, but overall they will not show a very high movement. They will remain in line with how the economy is growing. And fourth important point was, it is a measure of systematic risk. Systematic risk, macro level risk. Sir, what does it mean? It means it will impact everyone. The do we have formula for it? We'll have formula for everything, don't worry. But by the time you reach the formula, you should be able to read out the numbers. Systematic risk is, for example, if let's suppose a paper comes tough in the exam, you went for the paper, it comes tough. It will impact everyone or only few of everyone. Paper is tough. If let's suppose paper came normal and I was not able to do, that's unsystematic. A company level risk. That means company level risk we can maybe reduce. If for example one company is not doing good, I'll shift to what? Second company. If the whole economy is not doing good, if the whole sector is not doing good or company's economy is not doing good, then you cannot do anything with that. For example, if India is doing good, everything is doing good. If India is not doing good, then no matter what you invest, where you invest, your money will not give the return which comes out. That's called systematic risk. Now, after that we have few more, but I think it will be an injustice if I squeeze it up, because few things which are very important before I summarize for today is I take few points from you, which few things which are left for me is, for example, what is Sensex, what is the 66,684 means. For example, if I click here, what is this red green chart means, what is this box extra means, because this is a market. What is the what kind of a market it is the vegetable market and so on. So I have to explain, but today if I do it, I do not know how many of you have the articles if I have to go, but I'll not do hurry up, because you digest what we have done, it has to come. Then another point I have to explain is, which I have not spoken, a face value rupees 10, share price 1 lakh, what is it? And everything has a link with your inter. I'm saying everything has a link with the inter, only thing is the way we have to look at the things. And especially if I look at, for example, I told you the Reliance, these are few items which by chance Reliance results. When you go back today, if you're going to office for example, then please I would suggest you do read something on this part here, so that when Monday market opens up, you should know the reaction. Although I can roughly tell you the reaction tomorrow itself, and what should be the reaction after the market opens, and then whatever is the plus and minus, it automatically gets adjusted there. And by chance, since it's a morning class we have, so by the time we finish, market opens at 9 to 9:07, they have a prelim exam type. That means you study the paper, and from 9:15 the actual market starts. So we someday, I'll not show you every day, I'm saying it again, because that will be injustice to my subject. It's only what is relevant to me and which I think is required for my subject. For example, the concept of face value, book value, share price, these are required for my concept. You should be able to analyze in your mind that how it comes. For example, today what we did, free float or the total, that should fit in your mind. For example, P ratio we have done. For example, I'm just telling you, P ratio you've done. What is the formula of P ratio? Price by EPS. Now, if I tell you alternative formula, you would be able to create. What is a market cap? What is the market cap? Share price into share outstanding. If I divide market cap by net income, for example, roughly, do you think it will give me a P ratio? Think logically. Let me think logically now. Market cap formula is what? I want your brain should start. I am not dictating a formula today. At appropriate time, I'll dictate. I am just saying that these numbers will come handy to me. Market cap is share price into share outstanding divided by net income. Now, numerator remove share outstanding and denominator net income divided by share outstanding. What do you think will become? P ratio. I hope you are getting my what I'm trying telling you. That means when you will fall in love, because today if I give you all this, you might not be able to enjoy it out, but at some point you'll be able to see what it comes out. What this sector means is every sector has its own kind of a P ratio. This is P by V is price by book value. This also ratio, one of the ratios you would have done in your course, book value per share, for example. There could be a possibility, ROE. They tell me something. These are numbers which are telling me something. The numbers will come in the exam, but not exactly this, because what happens is market, for example, if the price today is 2428, it will change accordingly. Some ratios will change. Market cap would change. But in your case, something would be stagnant. So we are not disturbing anything. Lot of things from this side is pending. Before that, I have two formulas also pending. For example, you might have calculated some cost of equity formulas. They'll come as it is to me from them. That will come. Then I have some other formulas which are there. After that, I have this notation which comes out. So we are not disturbing anything as of now. What we have done today, I'll just quickly do a recap so that you can flip over your pages. We have learned some terms. We have learned some ratios. First ratio was EPS, earning per share. The new term which I learned in there was number of equity share. We call it as the share outstanding. Dividend per share was how much dividend per share we are paying to the equity shareholders. Preference shareholders from now onwards will be considered as a debt. It's because they have a fixed rate of a dividend. Then we had a payout. Payout was proportion of the earning paid as a dividend. Retention, proportion of the earning retained in the business. The payout and retention will tell me whether there is a firm is a growing or non-growing firm. Higher the payout, growth is not there, or investment opportunity is not there. Higher the retention, that means growth option is there, or opportunity of investment is there. Then we had the rate and yield. Rate was with respect to face value, yield was with respect to market price. Both are return, but the way of looking was different. Then we have a price earning ratio, very important ratio, price by EPS. Lower, if I say company is a P ratio of 20, you should be able to read out. That means my recovery will take place in how many years? 20 years. Or 1 rupee of investment, I have 1 rupee of earning, I have to invest how much rupees? 20 rupees. Lower the P ratio better, assuming other factors are same. Practical life, it is not possible that all factors would be same. Market cap is share price into shares outstanding, which comes out. Market price, share price into shares outstanding. Then we went to the beta. Beta is a relationship between return from a market and return from a stock. Higher the beta, higher the risk. Lower the beta, lower would be the risk. Higher beta means fluctuation would be higher. I want you should be able to, if you are able to read this number, let's suppose I give you 1.5. If you are able to read with every 1% of a movement, the stock will move by 1.5. Upside, downside, positive beta. If you have a negative beta, it's the opposite direction. Theoretical life, negative beta you can have. Practical, you will not have a negative beta. Beta of the stock market is 1. Relationship with myself is 1. Then second point was higher than 1 beta, aggressive beta. That means the sectors would be which move high, either very high or quickly low. And less than 1 beta is a defensive or low beta stock, we generally call it as. And then we had it is a measure of which risk? Systematic, macro level. It will impact everyone. I am not dictating any kind of a formula. By the time we reach the formulas, I am telling you the way we are reading, you will be able to create some formulas. Is that fine? So I'll wind up here. Tomorrow, I hope there is no doubt you will come as it is same time. Expression is not looking that great. Means yes, sir. That confidence is. Otherwise, the faces tell. Because if you will not be there, it's something. At least come for 5-7 days. Once you fall in love with the subject, it's okay. And rest things I told you, you have to carry the register. Again, I'm saying calculator, few different ink color pens, and safeguard yourself in case it's extremely raining. At least few of you try so that I can speak to someone else. I will not be able to speak out. And over the period in the classes, try to speak out more. How will you stay in touch with me? That I'll tell you. That I'll tell you once we have done the normal classes. And while going back home, take your this. I'll require volume 1 tomorrow. So volume 1 I have made. I could have made more chapters, but I thought at least we have material for few days. Rest I'm working on. Although I created the what you have. This will come now. Objective the MCQs. I created some, but I'll give you appropriate time. Means I was able to. I could see the format, but over the period I've got the hint what kind of MCQs they are making. So do not worry on that. That leave it to me. You just give me your next few months approximate time, and by the time you'll go, that's my responsibility. That you would stand at a place where you would be able to smartly talk to someone. So at least when you're doing the course subject, learn the subject, you anyhow have to spend time. There is no choice with you that I half-heartedly do. Some of will come, sir, crash course, etc. That is something which you have to do at the end of the course. But when you have a time in hand, read the subject in such a way that apply practically, read out. Today onwards, one habit you develop, which I'm not saying maybe 5 minutes, 7 minutes, 8 minutes. If you're traveling in a bus or an auto or anywhere, if you're not using your own vehicle, do not do it if you're doing Activa and reading this way. I'm expecting some I see on the road. They use Google Map. I don't know from where they come. Means they will go somewhere. Along with them, they will also take us somewhere. Means this is how, and this is how they drive. I don't know. That's a problematic part. Do not do this way, but read for 5-7 minutes at least, so that you start feeling. For example, you open up the paper today. I'm saying all paper. I am 99% sure they'll write about the Reliance result. You might not be able to get anything, for example, what is happening, what is geo, what number it happened, etc. But you will get some hint out of it that they are saying something, and within 10-12 days, you will be able to make sense out of the headlines. For example, monsoon. If monsoon progresses appropriate space and good, markets will anyhow boom. Now you would wonder how monsoon has a link with the market. It has a direct link with the market. If the monsoon is good, the agriculture would be good, farmers' income would be good, spending would be good, automatically auto sales will pick up. Means there is a link of all these items which I want, which cannot be captured in the subject for sure. I have the questions, I'll do the questions. But the anything which will make you, help you develop your common sense, that can come only when you read. No matter how much I try, I'll try my level best, maybe 5 minutes on an average at the end of the class. Not during the class because someone has to go, it has to go. On an average 5 minutes, totality maybe 15, 20, half an hour in a week's time or whatever time permits. I'll discuss, but at least I'll discuss that item which is something new, which you're finding in the history. For example, there is a change in the Nifty. I have not spoken to you, I have not spoken to Census. Maybe tomorrow's class I'll speak to you. Some change has come, and which is a historical change which has come on Thursday. The Reliance segregating its geo financial services from here. So there is some change which has come in that index. You should be knowing what has come. It will come only once in the lifetime opportunity. Next time you will not be able to see that opportunity also. So anything which is happening, you should be knowing. For example, we used to have what we trade in the market now are Nifty, National Stock Exchange Nifty. This is a Nifty. What is a Nifty which will come later on? It used to trade at Singapore, SGX. Now it has come to the Gift City in the Gujarat. For example, you should know these. That means our markets are developing very, very aggressively, and we are moving towards economy which can be a 5 trillion economy. I'll just tell you a rough idea what 5 trillion economy or these items means. When the Japan, US or UK, these have moved from the 2 trillion economies to the 5, and what we are moving, during that time stock markets increased by 3 times, 4 times, 2 times, multiples. So you should be knowing about this is a financial market. This is one of the products we have. And since we have a mutual fund also in the course, since we have a derivative also in the course, since we have M&A also in the course, since we have forex in the course, interest rates also swaps we have in the course. So we cannot avoid. If I say no, I'll not learn. It's okay. I'm learning the subject. You might be doing well with the subject, but somehow you'll feel the emptiness in yourself that I disrespected this subject. That's the only objective. And my objective is 4-5 days. You'll get comfortable. Then I'll take the call accordingly that we'll move swiftly in the course. Along with that, we are developing our habit. Is that fine? Tomorrow I'll see you. Thank you. Take care. Bye bye. Take care and bye bye. Tomorrow same time we are meeting. We're meeting same time, 6:30.